You're going to love this interview. Just got done editing it. I'm glad I got it live for you. I'll be in the comments for the next 30 minutes hanging out, answering any questions you have. In fact, leave a comment below about data points or what you think is going to happen to the company, and I will respond to every comment. Additionally, if you're just loving the content, click the thumbs up and I will go and check out your profile as well and give your videos some love as well. In the meantime, enjoy the interview. Hello, everyone. My guest today is Ryan Smith. He's now working on a company called LeafLink, the wholesale cannabis marketplace. Before founding the company, he successfully founded and exited 2 companies, one of which he sold to a New York Stock Exchange public firm. Ryan brings his experience creating and managing B2B firms and online marketplace investing in a highly regulated space to LeafLink as its CEO. Ryan, you ready to take us to the top?
Yeah, let's do it, Nathan.
Now, did you found the company as well?
Yeah, I'm one of the co-founders with Zach Silverman, who's our CTO.
Okay. When did you guys launch?
We raised the first $1 million in an angel round in December 2015. So the software actually went live March 2016.
Okay, and why do you tie the start of the business to your first raise?
So after I sold the last company, which was this investor relationship management platform, there was a full year I had to commit to the next company and quit the day after that year. And then Zach and I started working immediately on this. And once the capital was in, Zach was able to leave his job and we were both fully, committed. So
when was the first line of code written for the platform?
January. So January 2016. Yeah. I mean, all the things that we were doing, researching like Q4 2015 was really, none of that kind of carried over. It was just more like starting to pencil it out and whiteboard it together.
So 2016. And when was your first dollar of revenue?
Probably end of that summer. So end of Q2, Q3 of 2016.
And so, I mean, when you sum it up, I mean, if I asked you how much total cash did you guys invest, right, in the MVP before your first dollar of revenue, what would your answer be?
Probably around 200K.
Okay.
150 to 200K.
And what made it so, I mean, where'd you spend that?
Really just all engineering. So we had, we had one engineer at the time. We had 2 first hires, and that was really the core team through the middle of 2016. And so that's a lot of what the capital was spent on. The thing we really celebrated, I remember though, in that March 2016 was when the first order organically was generated between buyer and seller. Because obviously, the first few clients, you give it away, just get some feedback. And then a little bit after that's when we started beginning to charge a few clients.
Well, I want to dive into how you built the early stages of the marketplace, because that's obviously critical. You have the chicken and egg problem. But what's the team size today? How many people?
We have just under 90 people today.
Okay.
Around 50 in New York, just under 20 in LA. And then we have 3 satellite offices with, less than 4 people in them.
Okay. How many engineers of the 90?
We just nearly doubled our engineering team size. So about 30 right now. Yeah.
And any quota carrying reps, sales reps?
Yep. We have about 24 sales reps and client success managers within that group.
So of the 24, how many actually carry a quota? Do the customer success folks carry a quota too?
Yep. They have quotas around churn, engagement, upsell. And then on the account executive side, they have brand sign-ons, and that's pretty much their quota. When
you set, hiring salespeople and doing it at scale is an art, because you have to guess on pro formas, you have to guess on bookings target, you have to guess on ramp up time. You're fully matured AEs today. What do you try? What is healthy for them to be closing annually in terms of new revenue for you guys? Is it like $1 million quota or something else?
So we just recently transitioned to revenue quotas. For the last 3.5 years, it was really just around, because we're going for market penetration and growth of the community on the network, was a number of brands. So brands of the sell side companies to retailers who do the buy in the marketplace. And so in early 2018, we were bringing on about 30 brands per month as a company. And there was probably 5 reps. So somewhere between 5 to 7 brands per rep. And now we've, have a VP of sales. We've done a lot of education, really teams leveled up in a significant way. And we're closing on that number that I mentioned earlier. We just broke 100 brands signed for the first time in a month. I think reps are closing closer to 13 to 17 brands a month now.
So last month you signed 100 new brands.
Yeah, we first time we broke 100 new brands.
Yeah, total or new signups that month?
New signups that month. So we have in total almost 1,300 brands on LeafLink's platform today.
Yep. And then fill out the marketplace for me. So you define brands as the sell side. There's 1,300. What's the other side?
Retailers. So the use case would be, if you're a purchasing manager at a dispensary, you need to buy from each state is its own marketplace because you can't go across state lines. So let's say you're in California, you can buy from over 400 brands in one cart on LeafLink, hit submit, and then all of the orders go out by their license number to those brands. And then we have some SaaS tools in the back end to help them manage the life cycle of the order. But that's like the use case.
Sorry, name a real retailer like in LA or Denver.
So like Harborside is a big client of ours up in Northern California. In Denver, Medicine Man is one of our great clients out there. And so like there's a guy, Josh Best, was actually a retailer of the year last year, but he can order from all these different brands in one cart, whereas previously he was calling, texting, emailing 30 to 50 brands. And now all these brands are launching new products constantly. It's highly competitive on the buy and sell side. So this creates transparency.
How many buy side folks do you have, retailers?
We have over 3,400 retailers. So about four out of five licensed retail dispensaries in the United States have placed an order on LeafLink.
And how do you define active? So is it at least $1 through your platform over the past year?
Yeah. So at least one order through the marketplace every month.
One order marketplace every month. And so 3,400 did that over the past 30 days.
Yes.
Okay. I mean, that's great. So I want to, again, I'm getting these so that I can then dive into the early days, but just to be clear,
sure.
Give me also a real example on the brand side.
So a company like Kiva or Dosist in California, Dixie or Wana in Colorado, brands that we sell. And what we really focus on though, because it's one of the early bets we made, is when you think about the cannabis industry, think about like the physical flower, like agricultural product. We believe really in brands as the future. That's where we know companies have real margin. Just growing plants isn't really the business it was 3 or 4 years ago even. So we bet on CPG SKUs that are consistent to buy time and time again. And that's where we see the future in the space. So when you go on LeafLink's marketplace, the vast majority of our 70,000 odd SKUs are products that are well branded and consistently packaged.
So those 70,000 SKUs, those are published and uploaded, the metadata, everything from these 1,300 brands.
Exactly. Yeah.
Okay. So 1,300 brands. Sorry. And then you just said the 70,000 SKUs you said?
Over 70,000 SKUs in the platform.
Interesting. Do you see power laws? In other words, does one SKU make up 40% of total volume?
Sorry, you cracked up.
Yeah. Do you see any power laws, Ryan? Does one SKU make up like 40% of your total volume?
We see pretty close, like in when you see like 80-20 split in some more traditional supply chains, we see something closer to like 65-35 in terms of like how things are consolidated. The one thing that's interesting about our space is the space itself is a startup, and a lot of our clients are startups too. So the companies that we're talking about that had significant market share even a year ago, it changes so quickly. And so a lot of us is just like staying up to beat with those changes in space.
Okay. And what is the total, I guess, how do I define this? The total GMV of these kinds of SKUs, right, in the world right now is how much over the past 12 months or how much annually? For
the whole industry?
Yeah.
So the way we get to our like GMV market penetration is we think the 2019 whole industry size was like right around $12.7 billion in retail. And all these numbers are reported like the retail to consumer, retail to patient numbers. We know that a lot of our clients charge 40 to 60% margin. So we basically cut that in half at this $6.35 billion in wholesale transactions. And a few more numbers. Last month, we did $123 million in GMV. So those are buy and sell transactions in the marketplace, which is roughly like a $1.4 billion annual run rate, which is like 23%-ish of all legal cannabis wholesale now on LeafLink's marketplace.
So 123 through the platform exactly last month. Break down the economics on the buy side, on the brand side, the Dixies of the world, and on the Medicine Man side, right? So if 123 goes through your platform, how does that money get split up?
So back to like each of the different territories being their own marketplace. So we're like a collection of 23 different marketplaces. Like Colorado's its own, California's its own. Our largest markets right now are California's our largest, not surprisingly, just under like $40 million in GMV last month. Colorado is just over 30 million. And then Michigan, Oregon, Nevada are like the three that trail those. And what we're starting to do now is like we've opened up in some markets that are really new, like Florida. It's just medical, only a few shops. We opened up in Oklahoma, interestingly enough, right by you. And these
Oklahoma's pretty far from Texas. Just because we're in the South doesn't mean we're all living like right next to each other.
Well, you're close, you know.
Yeah, kind of close, I guess.
Kind of close. But yeah, so we're starting to open up in a lot of these new markets where they've never ordered on something that wasn't LeafLink, and that's a really cool opportunity for us to set this like standard defining how the supply chain works.
So how do you make money?
So we have 4 different revenue lines. Historically, when you think marketplace, you think take rate, right? Like you have to participate in the transaction. For us, over the last 3 years, we've been charging a flat SaaS fee, really more just the sell side companies, more as a validation of the product being valuable to them. We are not a cannabis company. We are a technology company, and that seems like a word game, but it's actually very important because a lot of our investors, our Hippos and Thrives of the world, they can't make investments as institutionally backed funds in cannabis touching companies. So we're not involved in the actual transaction. So we, for the first 3 years, couldn't take transaction fees until we recently figured out a way to enable that process. So up to SaaS, ads, and we're beginning to monetize that GMV number that we shared just in the last 6 months.
Okay, and let's go down each of those real quick. So the flat SaaS fee, I'm sure you have all kinds of different, amounts people are paying, but the sweet spot for you, what do they pay you per year to use the SaaS side on average?
Between $3.99 and $14.99 a month. $14.99 is definitely like a more minority group. Those are for very large distribution companies that have multiple brands within them. And then we charge by brand.
Got it. So they pay about $400 per month minimum across the 1,300 sell side folks, the Dixies of the world.
That's about right. Yeah. And that's really like we think of as the entrance fee to the community, to the marketplace, validation of value on the product.
Okay. Can I multiply? Can I take 1,300 times 400? That puts that revenue stream at 500 grand
I've heard
a month.
some of you, I know. Yeah. Go for it. Yeah. So that gets to where the SaaS revenue is.
Okay, good. But that is fairly accurate. That's around what you're doing there. What was that stream a year ago? Do you remember? Did you double it? You triple it?
We've quadrupled that, the SaaS revenue line from this time last year.
Okay. So you're doing like 125 grand a year ago on the SaaS side then.
Yeah.
4x.
Yeah, it was annually or on the monthly side. Yeah, that's right.
Yeah.
So that's about right on SaaS. And then once you're a member of the platform, you get access to a number of other different tools. So there's a lot of restrictions in the space around advertising. And so we allow brands at the point of purchase to retailers in this closed community to advertise new products, deals, all these different things. And that's historically been our second largest, up until last month, actually, our second largest revenue line. And then the third
I imagine though, Brian, that's pretty, I imagine that's fairly small, right? SaaS probably makes up 80% of your total revenue?
Yeah, it's right around, historically right around there.
Yeah. Okay. So ads are like what? Ads are like 15 and transaction fees are like 5% or something?
I'd say ads are around 15 to 20%. Yeah, your breakdown is not far off.
Okay. So first off, I love this. One of the things I love about the show is that since I do so many of these, like pattern recognition tends to kick in. There are so many SaaS companies killing it right now because they are jumping into the transaction game. So you now have a GMV model because there's basically 300 bips up for grabs on every dollar through your platform. 200 bips goes to Visa, and then the other 100, right, or the credit card company, the other 100 essentially are up for grabs. So how are you thinking about launching and getting into this transaction model?
So we very much believe in this like managed marketplace, SaaS enabled marketplace concept. That's very much how we see ourselves. And we think on the B2B side, simply taking a transaction fee in these closed knit communities is more difficult because they know each other. Like if I'm a B2C marketplace,
just go around
you today. Yeah, I'll pay 15% to find the next Nathan because I may never see you again. On these B2B marketplaces, what we think is you really need to bring additional value to charge. So there's things around financial products that we can create for companies and streamlining cash flow issues that they have, which are pretty significant in our space because people are literally moving cash. And so the points you're talking about, 2% to like MasterCard, Visa, we actually can't work with. If we were a shoe marketplace, we could use Stripe, PayPal, whatever. We can't use any of those merchants. So we had to create something called LeafLink Financial on our own that allows capital to move over the ACH rails and also removes the need for people to be moving cash in these transactions. And on those deals, we're taking 3 to 5% depending on their risk profile. We're building out credit risk profiles on companies as well to judge their what the risk is on lending some of this capital to them.
Yeah, but 3% on 123 million in GMV monthly, that's a $3 million a month revenue stream if you get that cranking across your entire base, correct?
Yeah, really significant. And we've been doing this for the last 6 months. We launched in January. We originated like right around $26,000 in transactions through it. Last month we did well over $2.25 million. And that's all totally manual. Like we're literally calling banks and setting.
Wait, sorry. I don't understand what you mean by that. So when you say last month you did $2.25 million of what?
Of transactions within our larger GMV that have moved through this LeafLink financial program.
Oh, I see. Okay, got it. So basically you have 123 million. Part. Yeah, 123 million total. 2.25 went through this system, of which you're able to capture on a minimum bottom end 0.03, 3% of that.
Yes, exactly.
Yeah. I mean, that's like 60, 70 grand. That's pretty good.
And so what we've done since closing the B round with Thrive is all that's been really manual. We partner with the side fund that handles all the transactions. And so we're beginning to automate a lot of that. We've made some of our first hires on LeafLink Financial, and we're going to be bringing it into, back to your point on like Visa, MasterCard, make it native to the checkout process. So for our clients, they feel empowered in the same way they would if they were in a more traditional industry on using these payment solutions.
Yeah. Well, is it easy for you to go from 2.25 of your total 123 million through your platform monthly? Is it easy for you to go and get 100% penetration out of the 3%, or is it difficult to convince people to basically give you 3% of GMV?
What we found is like it's similar in how it's grown to the network effect around liquidity in the marketplace. So in the very beginning, the problem in the space is that there isn't a clear price point for a lot of very basic services. So like distribution companies are charging a very wide range for their services. Payment processors, some are, kind of legal, others are international. So those range as well in pricing. So what we've seen is we came in at these numbers we mentioned. There's definitely always a lot of questions and pushback. But what we found is it's not a no, we don't want this service. It immediately goes into negotiation around the price. And so that's part of the manual process that we're looking to automate.
Between 3 and 5%. Really
yeah. But we feel really confident about, as we begin to automate more of this, moving that from the small penetration that we're at now to, I think, breaking like 30, then 50% of the GMV in the next 2 years that's like our North Star.
Yeah. What's your GMV growing by month over month?
So right around 11% month on month with the GMV growth. We closed out last year. So the goal for 2018 was to move $500 million in GMV. We closed out just under 700 million. And this year the goal is 1.8 billion. So yeah, a little more than a tripling year on year.
You're on track to do it?
Yeah, we are. We were, like you said, it was like 122.8 last month. 125 is 1.5. And so we're 2 million short of, we're definitely on track for the 1.8, which is where we're looking to hit by the end of the year.
Yeah, that's great. So let's fast forward a couple of years. You're now doing 100 million years in revenue, not GMV, but you as a company in revenue. Of the transaction, of the revenue lines you just told me, SaaS, ads, and transaction fees. What's your prediction? What's going to make up the majority of that 100 million?
Certainly the LeafLink financial revenue line will be the largest. SaaS will continue to grow. I think it's powerful. We've actually only raised prices twice in the history of the company in certain markets. And so I think there's potential for us to have, we just hired our first professional services and integrations team. There's upsell opportunities around a lot of those things, and those will continue to grow in a great way. But for us, like empowering companies around payments and movement of product is key to the liquidity of the marketplace.
Yep. Okay. So walk me through, you've obviously raised capital. You just announced, I think in August, 35 from Thrive. How much total have you raised now to date?
We've raised $49 million for the US entity, and we did a $2 million JV with Canopy Rivers, which is the venture arm of Canopy Growth up in Canada.
Okay.
So 51 total as a company.
Okay, got it. So 51 total. And then why, obviously dilution is a real thing, right? So why did you need to go raise that capital? Why couldn't you get creative and just keep using the money you already had?
So we've always been really capital efficient. We were barely through half the money that we raised in the Series A almost 20 months before the B closed. For us, I think it's really
Wait, sorry, say that again. What, 20 months before the B closed?
So 20 months before the B closed, we still had a significant chunk of the A capital.
Oh, got it.
And the reason to your point, we've gotten more aggressive is we think really two things. First is we clearly have a lead in market penetration and where we have to use that lead to our advantage. Also, the uniqueness of the industry. We think that right now, particularly this year and into next year, as the East Coast falls in line with the West Coast on legalization, it's really like second place is the first loser for marketplaces, particularly industry specific marketplaces. So for us to raise even maybe a little bit more than we need, but to pedal the metal as aggressively as we possibly can, that was like really the theme behind it. And knowing that second place is the first loser, concerns around dilution and potentially raising a little more than maybe was even needed were, one way to rest easier on those.
Yeah. So, I mean, help me understand what you're comfortable with. And right, obviously you're putting pedal to the metal to drive growth. I mean, are you comfortable burning $1 million a month?
Are we comfortable? I mean, it's, I feel like I see us potentially getting there.
Yeah.
It's definitely more aggressive spending than we've ever done historically as a company. We've always kind of covered half of our expenses. But like it's part of that commitment. And so if that's what it takes to hit the goals that we're doing, increase those penetration numbers on LeafLink Financial and just be this industry standard platform in the next 18 months, that's what we raised capital for. And that's the bet that we all make together with our investor partners.
Yep. So what burn today is what, like $100,000, $200,000 a month?
No, the burn today is like, so it's still like that half mark. So
okay. $500,000. Yeah. Okay. Good. Good. I mean, based off basically what you're saying is your total expenses are 3x your monthly revenue. So net, you're burning about half of your total revenue.
We're burning half. Yeah. So if we're spending like, one a month and we're bringing in half of that as revenue, the burn is like you said, around 500.
Yep. No, exactly right. That's good. Okay, cool. And then last question here, churn's critical, right? In SaaS companies in general, right? When you look at just your SaaS product line, revenue churn over the past maybe month, what is that coming in at?
So last month was a particularly good month. We try to keep it to between this like 12 and 15% annual churn on the brand side. So last month was 0.5%, but we've historically kept it below the 1% per month to meet that yearly goal.
And what is this expansion more than make up the 12% churn?
Will expansion make up for it?
In other words, for the cohort you have signed up exactly a year ago, you'll churn 12% of that over a year, but will you expand that same base by more than 12%? So net revenue retention is greater than 100%?
Yeah, absolutely. There's like this interesting dynamic right now where as new states come online, like Illinois goes legal, doors open in January. There's going to be a flood of several hundred licenses there that we'll bring onto the platform. They're likely clients already in another state. And those are, several states seem to be coming online every 3 to 6 months now. So that far outpaces any churn that we've experienced.
And who are your closest competitors? Name two.
So I'd say there's no competitor that we have that's in more than one state right now. I'd say like there's some e-commerce hubs that sit on top of distribution companies, but like we have logins to those platforms and we've used them. We know, people that have left them to come to LeafLink, and none of them have really raised any capital to speak of. I think the longer term concern for us would be like, this is like the uniqueness of the space. So I'd say a Shopify, honestly, or like an Ariba version of like a B2B marketplace for SaaS, but in more traditional spaces is like the long-term.
Okay. Well, let me run through some for you. So what about Flower? Obviously they're the darlings of YC, right? Is Flower a real threat or no?
So that's like a B2C subscription service, right?
Kind of. Depends on how you look at it.
Yeah. I wouldn't, I'd say no for that one. If anything, they'd probably be a client of, go ahead.
A client of yours. What about Toker?
No, I think they were like a payment solution, right?
Everyone has a different mousetrap.
Yeah. I would say that like there's a few companies that are trying to launch like e-commerce solutions that sit above, like brands and be used in that way, but no one has this like centralized marketplace that we like aggressively are thinking about putting out of business.
Very good. All right, let's wrap up here with the famous 5. Number 1, favorite business book.
Recently, I've really liked. I read International Bank of Bob. It was about. Actually, you know what? That was a good one on Kiva, where he goes and visits everyone he's lent money to. Actually, Memos from the Chairman. I recently read that one. I don't know if you know, like the it's a collection of all the memos by I think maybe it's Bear Stearns, but over the history of the CEO at this company, and it was just like a fascinating like 20-year.
Yeah, you're talking about Alan Greenberg.
Yes, Alan Greenberg. That was it.
Yeah. All right. Number and he is obviously former chairman of Bear Stearns. Number 2, is there a CEO you're following or studying?
We've been getting closer with some. So when we say Isaac Oates at JustWorks right now.
Number 3, what's
He's
your favorite?
done some cool stuff on board management.
Number 3, what's your favorite online tool for building your company?
So I was in love with Inbox by Google, not Google Inbox. And then they shut it down and it was just crushing. But really, like, even still now, some of the tools on like snoozing emails, reminders that pop up in the inbox as this like hub of the day to day. Love it.
Gmail. Good. Number 4, how many hours of sleep do you get every night?
I guess 7.
7. Okay. And what's your situation? Married, single, kids?
Single. Oh, sorry. I'm not married, but I'm not single. I've had a girlfriend for like just over 6 years.
Nice catch. Don't hurt her to listen to this. You'd be in trouble.
No. I was thinking like, is this a tax question? Single, but we have a serious girlfriend. Yeah.
Why do you think I'm do I look like a government official to you?
Some of these questions are so like boom, boom, boom. I'm like, all right, so legally single. Okay.
That's just my style. And how old are you?
28.
28. Last question. What do you wish your 20-year-old self knew?
Talk to even more people. Like, even if you don't know what you necessarily want to talk about with them, just like there's so much to learn from, and you never know who knows who. So talk to even more people than you're already talking to, because that's the best way to learn that. Guys, there you have it. LeafLink, they've raised $51 million to grow their brand with a recent round. They've got 1,300 brands like Dixie on the sell side of their marketplace, paying $400 per month for their SaaS product. So 520-ish grand a month right there in revenue, or a $6 million run rate on the SaaS side of their business. Again, going through to the sell side, connecting through to buy side retailers, about 3,400 on that side of the marketplace. Those are folks like Harborside and Medicine Man in Denver. Total GMV through the platform last year broke, call it $700 million, hoping to break about 1.8 billion in GMV this year. 3 revenue lines, that SaaS model I just mentioned. 2, they're getting to transaction fees via LeafLink Financial, where they'll take between 3 and 5% of that GMV through their platform. And lastly, an ads marketplace. So we'll see as each one scales where they end up. Ryan, thanks for taking us to the top. Thanks a lot, Nathan. You guys know I fight like heck to get these data points for you from these CEOs that rarely do these kinds of shows. If you want more shows like this, make sure you subscribe right now. We're trying to get 10,000 YouTube subscribers by the end of September here, 2019. And it would mean the world to me if you clicked now to subscribe. Additionally, I've got 2 more great interviews for you. If you want more data points from the world's leading SaaS CEOs, click and watch one of them right now.